Hi, I'm Phil Davies, Senior Writer for the Fed-Gazette. Health insurance serves as armour against the sticks and stones of life. Given the high and rising cost of healthcare, it's difficult to overstate the importance of financial protection against sickness or injury. But all aspects of that protection, who provides it, how much it costs, what it covers and who's left uncovered, are in flux in today's healthcare and insurance markets. For example, health insurance provided by employers covers a smaller share of working-age people and is less comprehensive than in the past. As to public insurance programs, their generosity varies greatly from state to state. If you earn a small paycheck or don't have a job, whether you have health insurance depends to a large degree on which state you call home. If having health insurance guaranteed good health, people in the 9th District will be among the healthiest in the country. According to the census, in 2009, the uninsured rate for people under 65 years of age was lower than the national average in every district state. However, there's a lot of variation among district states, as this chart shows. In Montana, the share of uninsured was considerably higher than in Minnesota and Wisconsin, for example. These differences stem from a number of factors, including the mix of industries and the relative proportion of large versus small businesses in each state. Public policy also has a strong bearing on uninsured rates in a district. Some state governments have gone further than others to provide an alternative to private coverage for people living on low incomes. State uninsured rates haven't changed much over the past decade, and for the most part, the district has bucked the national trend of slowly declining coverage. Only South Dakota's rate was markedly higher in 2009 than it was 10 years earlier. But its picture of consistency obscures the changing dynamics of health coverage in a district and nationwide. Employer-sponsored insurance is less extensive than it was a decade ago. Nationally and in most district states, the proportion of people covered by workers' policies has fallen, as you can see in this chart. Both the rising insurance premiums and the Great Recession have eaten away at workplace coverage. The cost of employer-sponsored coverage varies from state to state because of different consumer preferences, state-mandated benefits, and other factors. But every district state has seen big premium increases, mainly due to inexorably rising healthcare expenses. From 2003 to 2009, premium increases easily outstripped inflation, causing some employers and workers to drop coverage. The Great Recession further undercut coverage, forcing many employers to lay off workers or cancel health policies. Efforts by insurers and employers to buttress health coverage have focused on reducing insurance premiums. For many employers, that has meant cost sharing, offering policies with high deductibles. In recent years, average deductibles have risen markedly, both nationwide and in district states. In Wisconsin, the average family deductible, adjusted for inflation, increased 55% from 2003 to 2009. High deductible plans have helped to limit premium increases for employers. In particular, small firms, which typically pay more than large ones for plans with similar benefits, have embraced high deductibles. But high deductible plans have been criticized for their skimpy coverage and the incentive they give people to skip preventative care. And it's difficult to tell to what extent such cost control efforts have affected health insurance coverage. The fact remains that employer sponsorship has continued to drop, although it may rebound as the economy recovers. An increasing proportion of low-income people depend on the government to provide health coverage. In the district, state programs intended to help the uninsured differ widely in scope and intent. The states of Minnesota and Wisconsin have gone to greater lengths to provide public health insurance than other district states and the nation as a whole. In Wisconsin, the state government aims to provide health coverage to at least 98% of the population through programs such as Badger Care, an enhanced Medicaid program. For its part, Minnesota sponsors a state health insurance program that earlier this year expanded its Medicaid program to cover single adults. However, such programs run the risk of crowding out private insurance, inducing firms and workers to switch to public coverage. Thus, increased enrollment in public insurance can undercut private coverage instead of reducing the number of uninsured. And in district states confronted with big budget deficits, continued funding of generous public insurance programs may prove unsustainable. Hanging over the issue of health insurance is federal health care reform. Implementing this legislation, not a sure bet because of repeal efforts in Congress and legal challenges, is expected to increase health insurance coverage. In the district, the effects of expanding Medicaid, requiring people to buy insurance and other features of the law, will be greatest in states like Montana that have relatively high rates of uninsured. But the full impact of Obamacare on health coverage is as uncertain as the prospects for survival of the law itself. Much depends on how individuals and firms respond to the various incentives and penalties embedded in the law. For much more detail on health insurance coverage in the 9th District, see the April issue of the Fed Gazette. Thanks for watching.